Hello, folks. This is Jim Frimpson here with Frimpson Podcast. Today is Friday. Today is a real estate, day. Today I'm going to talk about mortgage. What is mortgage? How does it benefit us? If you see mortgage companies, mortgage loans, mortgage this, what is it about? Why people get mortgage, and then what are the advantages and disadvantages for getting that kind of loan. So today I'm going to talk about mortgage. Before I continue on, share my channel, forward it to your friends, and then become part of YouTube group companies. If you own a company or you don't own any company, even if you are individual, claim to be YouTube group, part of YouTube group, because we are trying to build a foundation to help individual succeed in this country. I think the time has come for us to prove to the billionaires that we can do what we do. We can build ourselves. Without us, they cannot succeed. So become part of YouTube group companies, small companies out there. Let us all come together to build ourselves. So what is mortgage? Mortgage is a loan used to buy a home where the property is served as a collateral for the loan. So mortgage is a loan used to buy a home or a house, a building, commercial building, land, anything related to real estate. You receive either residential mortgage or commercial mortgage. You receive it, okay, to help you purchase the kind of property you want. So that is it completely. That is it. A mortgage is a loan given to you, granted to you. So when we talk about mortgage, if you sit down with your loan officer, and then they are talking about mortgage, what kind of loans you want and all sort of things, that is it. There is nothing different, there is nothing fancy, there is nothing really about it. It is a loan, simple loan that is given to you. If I say simple, I'm not trying to say that it's simple as credit card. We will talk about different kinds of loans, but it's not as credit card loan or installment loan. Mortgage loan is completely different. Okay, that is why it has a different name for it altogether. So somebody might ask you, how do lenders consider someone who qualify for mortgage loan versus credit card? If you are looking for a mortgage to buy a house, lenders consider so many things when it comes to giving you the loan. They consider, first of all, your credit score. It's very important. They have to know your credit score to make sure that you can afford, because credit score tells a lot about individual applying for that loan. So your credit score is number one. Number two, they want to check your finances, your income. The income is something that majority doesn't pay attention to when they are getting ready, preparing themselves to buy a house or to buy any kind of property. So you need to make sure that your income is solid. We will talk about the kind of income you will need to buy that house. Not all incomes are qualifiable. Even though it's an income, not all of them can be qualified to buy a house. And then number three, the lender will consider your down payment, how much down payment you have, how much money you've saved in your bank account, right? All these things will determine the kind of loan you are getting, right? All these things will determine the kind of loan you qualify for. Some will qualify for FHA loan, some will qualify for VA loan, some will qualify for conventional mortgage, and some will qualify for even agricultural loan. So there are different kinds of loans out there that, you know, depending on your situation and then the kind of property you're looking for, you know, so you have to know the differences between the mortgages you are getting. You need to talk to your lender. You need to talk to your loan officer, sit down to find out what kind of loan you can qualify. It's very important. You know, so if you are getting a mortgage, you need to know all these things: your income, your down payment, your credit score, and other things. Those are the things that determine, one, either you can qualify or not. And even if they qualify you, your credit score will determine your interest rate. Your credit score will determine your interest rate. So it's very important to do what to consider when you are ready to apply for that loan. Another thing that somebody might ask, if you're getting something like loan to buy a car, they consider the car as a collateral, right? Sometimes they will ask you to come out with extra money. If you don't have great credit, they ask you to put down maybe $2,000, $10,000, or whatever it is, just to make sure that you don't default. If you default on the car loan, they can come and take it and take your money too. So someone might ask you, what are the collateral that the lenders look at to consider to give you the mortgage? Somebody might go out there and then get a loan and then start jubilating, oh, I didn't put anything down, I have my house and this and that, which is, of course, it's fine. But the collateral that the lenders normally consider is the building itself, the home, the land, or anything you are buying, considered real estate, is what they use as a collateral. If a bank is giving you $2 million to buy your residential property, or $500,000 to buy your residential home, how much are you going to put down? Maybe 20%. If you don't have 20%, and then you have to come out with maybe some percentage because your credit is good, your income is good. They have to consider all those things and then, you know, be lenient to give you very good, you know, interest rate, and then allow you to put some small money down. What you have to consider is that the property you are buying is the collateral, bank's collateral. Should in case you don't do what? You don't pay the loan, right? The bank can come in, take the house from you, foreclose it, take it, sell it, and then make their money. You know, it doesn't matter how long you've lived there. If you've lived there for 10 years, 20 years, or whatever it is, if you don't pay, that is the bank's collateral. They will use it to take this thing from you. And then even if you don't put up to 20% down, they let you pay mortgage insurance. So normally banks doesn't lose when it comes to mortgage. If they are giving you a loan, they don't lose. Okay, somebody might say, oh yeah, if I don't pay, the bank will lose. You are kidding yourself. You are the one losing, because first of all, you've contributed your money in it. Secondly, you've been paying every single month. The house is sitting there, the property is sitting there, nothing is happening to it. So if you walk out today, the only thing is the bank will come in and then process foreclosure, you know, start this thing, foreclosure process, and then foreclose the house and take it from you. So banks use your property as a collateral. As a collateral to do what? To qualify you to get the mortgage. So if you are getting a mortgage, if should in case you are planning to get a loan to buy a house or whatever it is, you need to prepare yourself. You need to make sure that first of all your income is solid. You need to make sure that you can afford to pay. You need to make sure that you can, you have some backings. Should in case something happens to you, you have money to pay so that the bank doesn't take your house to you. So folks, this is simple explanation of mortgage. If you are looking for a house and then looking for a loan, mortgage loan, that is it. It's a loan given to you to buy a real estate, a home, or any property which the bank use the building as a collateral to secure the loan. That is it. It's just simple. It's simple as any other things. If every loan, we consider every loan as a loan, but there are some loans that doesn't have that collateral in place, like credit card. That's why credit card interest rates are too high. If you look at credit card interest rate is around, from 16 to 28, 30%, right? Interest rate, which if you look at mortgage loan is around 6%, 3%, 4%, because they know definitely that they own the house. If you don't pay, they can come and take it from you. So folks, there's Jim Frimpson podcast. Today is Friday. Today is a great day. Like the channel, forward the channels to your friends. Let us all share our ideas. Okay, follow me, follow my channels, and then let us all share ideas, come out with one great mind with great ideas for us to grow.